once again to discuss that. But shifting focus, viewers, from macros, let's start talking about company-specific updates. We had an update coming in from Borosil, wherein they've mentioned that they were able to secure some supplies of LPG from oil marketing companies, and because of that, consequently, operations at both their borosilicate glass furnace as well as the pressware products and opal glass furnaces have been fully restored to their full capacity in Jaipur. So let's understand what these contracts are, what has panned out over the course of the period where there was an LPG disruption, and more importantly, what's the outlook ahead. We have Mr. Pradeep Kheruka, the Executive Chairman of Borosil, joining us on the group. Mr. Kheruka, morning, and thanks so much for your time. Good to be speaking with you again. First up, give us a sense of the impact that you have seen when there was an LPG shortage compared to now that you have secured LPG contracts with OMCs. What is expected to be the rate at which you will be able to recover all the slowdown or the losses that you have seen during that period where there was an LPG shortage?
Thank you for having me. I must say that the government has been extremely proactive in dealing with us. And when I'm saying us, I mean with industry. And they have currently said that they can do it at about 45%. It's a 45% cut, 45% supply, sorry, which we are getting currently. And we have been able to restore full production by using other means. So I would say that the production is not affected any longer, and the supply of LPG seems to be stable. In Borosil Renewables, we are getting full supply of gas. We are getting about half the gas at the usual administered price, which is the historical price, and about half of it we are getting at the market price. But there's no shortage per se. So we believe that it's a matter of time. Once the logistics get sorted out, which they seem to be on the way, we should be back to normal pricing, even perhaps, or maybe somewhat elevated pricing. But my conversation, the Ministry of Petroleum says that the government has been fully seized from the 1st of March. They have made alternate arrangements. So at least we won't want for fuel. The pricing is something that we'll have to wait and see.
And Mr. Kheruka, so the plant had paused production, right? And how much of that has been disrupted? Give us a sense of the quantum.
I would say the plant actually never paused production. You see, we've been manufacturing glass for a very long time. And we have very, very adept, very competent people. So even if there was shortage of gas, they found other means. Basically, we use gas because that's the best way to regulate the temperature of the glass and its viscosity at the time that we are about to pour it and at the time of forming. In melting itself, in our consumer goods business, we use electricity. In the solar glass business, we have dual fuel. We can use oil, we can use gas. And we have, in solar glass, we didn't stop even for a moment. In fact, the solar glass business continues absolutely unabated, untouched by the events of West Asia. If anything, the demand has firmed up a little bit, and more people are now looking at solar installations. So this has actually been good for business to the solar industry as such. Of course, the pricing is a matter of wait and see, I would say.
And in terms of disruption, Mr. Kheruka, therefore, disruption has been very limited from what I understand from you. You've used alternatives basically to try and ensure that business continues as usual. But as a result of that, my sense seems to be, correct me if I'm wrong, is that maybe energy costs will likely be higher for this period of time, both on even the gas that you are currently getting as well as the alternates that you're using. Costs may be higher. Give us a sense of how much of an increase in terms of costs that you're seeing for this intermittent kind of period, but for this immediate period, what is the kind of increase?
See, so there are two questions that you've asked. One is about the disruption. I would say that we were successful in evading disruption. we were able to manage the crisis without disrupting production at all. And that was, I think, a very big achievement that we were able to have. And the second question you have is about the cost. Now, as I said, the price of gas, 50% we are getting at the old price, which is before the price got disrupted, and 50% we are having to pay about 2.5 times, 3 times the previous price. So that 50% that we are now talking about Borosil renewables, but we approached our customers, and they were good enough to increase their prices to us, our selling prices. We've given them an undertaking that the moment gas prices come back to normal, we're going to reduce our prices. So we are not looking at this as a profit making opportunity. We're looking at this as a crisis, and we are pitching in, and our customers are pitching in, and I would say that there's been no disruption to the solar business at all as a result of the somewhat higher prices. And so far as consumer goods are concerned, of course, there has been an impact because of the higher prices, and we don't know how this is going to pan out. For the time being, we are still evaluating our strategy for pricing going forward. But at least in production, there is no problem.
Okay, understood. Mr. Kheruka, talk to us about the impact that this temporary disruption has had on your business. Any change to the FY27 growth outlook? Any more than expected impact on Q4? If at all, you'd like to share that metric with us. And assuming LPG prices are, they see a spike of 10 or 20% more from here, what would be the sensitivity of your margins to any change on a less favorable end?
So, answering for both my companies, the ones which are majorly affected. In Borosil Renewables, I would say there has never been any disruption in production at all. And as far as the question of pricing is concerned, we were able to explain to our customers that this was a force majeure situation, and they agreed to pay the higher prices. So that did not impact us at all. We have been able to manage our operations without any difficulty. Of course, going forward, we can see prices of some raw materials are going to rise, prices of some other things are going to rise, but we are not hasty people. We will wait for at least another 6 weeks, to evaluate what's going on and what is the final situation. And based on that, we will take steps, and we will decide going forward. I do not see any change, really speaking, either in the profitability or the production of the both my companies.
Mr. Kheruka, on the consumer goods side, you seem a little tentative with regard to what the impact could be. Talk to us about how much of margin dilution is already being witnessed on that count.
See, there's obviously bound to be some margin dilution in the current month, at least in the month of April, as far as I can see. March went by without any difficulty. In April, we might expect some dilution in margin. And the question is, what is the customer outlook going to be? So far, so good, I would say. Whatever disruption we see happening in West Asia is something which is not happening to us in our market. The consumer sentiment or consumer behavior does not, we cannot gauge any change in impact. If there is a very large inflation that happens, which somehow I feel the government is very sensitive to managing inflation. So if the government is able to manage inflation, and they might very well be able to do that, then I don't see any disruption at all. Generally, other than this whole issue, I would say that there has been absolutely, the market is doing very well for solar, for consumer goods, for scientific, where all across the nation is in a very upward, very enthusiastic sort of a mode.
Absolutely. Point taken. Thank you so much, Mr. Kheruka, for coming in and giving us that perspective. Of course, some bit of margin dilution on the consumer business is what we'll see. No real impact. Surprisingly, there's been a complete pass-through with regard to pricing on the solar glass side. Surprising or unsurprisingly, because in any case, we are net importers in terms of the overall demand coming out from India. And therefore, not really surprised either that there has been that huge need for a price revision which has been absorbed. But with that, what we'll do is tip into a very short break. On the other side, two very interesting conversations, one with Dhanuka Agritech, the other one with SkyMet. We'll try and get you both of those on the other side of this break. Stay with us.